folks, I'm L.A. Little, and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, each week asking ourselves what happened last week and what might it tell us about the coming ones. I do a show every Sunday night live at 9 o'clock Eastern Time here from the base of another snowy night in the Rocky Mountains. Folks, I'm glad you could join me. Those of you who are live, and of course those of you who watch the archive shows, because you got other things to do at this particular point in time, and that's fine. That's why it's 24 hours a day, every day of the week, at your convenience. Just pop into TATV, all channels. You can either watch the live streaming there, or you can of course go over to YouTube and watch it as there as well. As far as these markets, well, last week we saw a tumble. A continued tumble, maybe is the way it should be put, as the sell-off that began at the beginning of the year has continued, and we're looking at it here on the weekly. Remember last Friday, this is a weekly chart, last Friday we had the big reversal day off the nominal new highs, right? Trades back down. That was a negative bar. We thought we'd see some follow through. We did see the follow through. Now we're back down here on the S&Ps pushing lower. Now it's, all's not lost, because if you look at it on the daily, it doesn't look that bad. The bad part, if we should go to that first, is that we had multiple swing points break. One here, one there, right? You got another one down here it's going after. Nice big spike down, multiple swing points break. That usually says 2 to 3 bars farther, right? Extension to the side that breaks, which is the downside. You got 1 bar, expect 2 to 3. How far can it go, right? That's kind of the question. That's always the question. How far can it go, whether it's going up or whether it's going down? And so we have one measure here that's strictly neoclassical, and that's this multiple swing point lows on a time frame, the breakage of them. And that really doesn't tell us how far in terms of price, it just tells us how long, usually 2 to 3 bars. We've already got one in place. That means we should expect at least another one, but it doesn't mean that it actually has to stay down there. For example, I could envision a scenario where you open here and you close up there somewhere, right? So I mean, it doesn't mean that it has to be, it doesn't mean it has to close lower. It just says that it will extend lower 2 to 3 bars. So when you look at it from that perspective, then you can start thinking about other possibilities, other potentials, and in this particular case there's ABCD structures to the downside, and those ABCD structures are almost done. It's almost done here on the S&P 500. It's almost done if we pull over and look at the Dow. I haven't looked at the Dow in a while. Let's pull that guy up. If we look here on the Dow, you can see the same sort of thing, ABCD structure in place. It's broken multiple swing points as well. Didn't do it on one swoop though, but you can see it here, same sort of scenario, right? This guy's almost done, and you can see the support they're coming into. There's one here. There was one on the not the Nasdaq, excuse me, on the S&P 500. If we go over and look at the weaker indexes, and one thing you should notice is when we go back to the weeklies here, is on the S&P 500, I'm going to pull that one back up right quick before we dive into the Nasdaq. On this particular case, right, you can see to break a swing point low on the intermediate term time frame. And why do we talk about swing point lows and swing point highs? Well, because when they break, trend transitions, right? We've been in a bullish trend for God knows how long now. And when they break, that changes trend, that transitions trend, right? That resets the clock, so to speak. The low here on the weekly, this clock has been running for 15, 16 months. 1767.99, we're at 1815. So you'd have to go down another 40, 50 points to break that guy, right? To reset it. That's probably not that likely on this particular time frame at this particular time. In other words, another 40, 50 points down on the S&P this week, yeah, it's a stretch. It's probably not going to happen. And it's probably not going to happen, not just because that's a long ways down. I mean, we did see 50 off the top tonight, or this past week. It's just that it's way down there. Here's the NASDAQ. NASDAQ, just like the others, has ABCD structures in place, and they're bearish. And it's had them before. You know, in case you haven't been, you know, tuning in and watching, we've had multiples of these in place. This one actually overdid itself. Then that set up another one, right? Which completed that, which set up another one. You see how they're just going one after another here? So you had one up here, you had two there, you had three there, and now you're on number three. Excuse me, you're on number three. So three successive ABCD structures to the downside. A lot of people like to call, you know, count these things as waves. You know, so like that's one, that's two. This is the third wave, but then what do you do about this wave? That's why I don't count waves. I just count them one at a time, right? ABCD structures, it's cleaner. We don't have to have that Elliott 5 stuff, right? I don't care if it goes 20. I can count them all the way down, and I don't have to do anything special about it. You know, as long as they set up B points and they break B points, then that says that they're going to try to extend out on a one-to-one extension. And that's usually true of most sectors, most stocks, most indexes, right? That's usually what they do. Now, sometimes they can do, you know, 0.9, or sometimes they can do 1.2 or whatever. You know, it's not exact, you know, but it gives you a rough measure, and that's what you need in the market. You need rough measures, things that you can use, rules of thumbs, right? And you don't want a whole bunch of them. You know, all the neoclassicals trying to get rid of most of them, because most of them are overlap, right? We just need 4 or 5 good ones, and that's what we try to look at. So anyway, ABCD structure down on the daily, right? Coming after these lows now. Remember back when we were up here, I was talking about the Feb 3 bar that we were going to try to get into. Well, we got into it, right? And then last week we talked about it probably bouncing, doing a retest, regenerate on the Russell, if you remember. That's what we did on the Russell, and we'll look at it next, and then we regenerated lower. So now we're down here testing these lows. You got support down here. ABCD structure takes you right to the lows. That's about another 1%. Going back over, let me get up the IXIC here, and we look at it on the weekly. And this is where it becomes instructional, because now when we saw it on the GSPC, right, on the S&P 500, we didn't have any swing point lows that were even close. Well, here it's a totally different story. Here on the NASDAQ, on the NDX and the NASDAQ, you got swing point lows, and they're just right underneath where price currently is. Okay, we're talking very minor declines to get there. Now, we just saw the ABCD structure had completed, or it was completing, about another 1%. And we saw that's true on the other indexes, including the stronger ones. That suggests that we're probably not going to break it on this time frame, and there's other reasons for it. I mean, you can just take the extension off the top. There's no ABCD structure in place. It's going to try to put in a B point. If I'm a buyer, where do I want to buy? Well, I want to buy at the lows. These are the lows. Also, if I'm just a classical guy, I could probably project some sort of a head and shoulders kind of action, right? You kind of got a head, shoulders here, right? So there's your shoulder, head, and you need a bounce to get your other shoulder. So you can imagine these kinds of scenarios setting up. Classical, non-classical, but these head and shoulders, they're very difficult to play because you don't know how far this thing's going to go. But if you look at neoclassical will try to give that to you. And where's it going to give it to you? Well, we go to our trusty friend, the Russell. The Russell has been our best indicator all along. Russell's coming down to do the same sort of thing. He's going to test into potentially breaking multiple swing point lows on multiple time frames. His is set up a little differently, but he's got them down there as well. They're not that far away. So if the Russell were to just come straight on down here, then we'd have an ABCD structure. I mean, we'd have a break of multiple swing points, multiple time frames, and we could really get an escalation down. But on the Russell, we actually have a better indication if we go back and look at the daily, right? The daily, just like the others, ABCD structure of a downside. This one's almost done. It projects down into about 1100, right at the top, right, of this support zone. And you can see that little area is probably going to be tough to get through. So you're finishing off ABCD structures into an area that should give you buyers. That's where demand should show up. Now if it doesn't, then really we have something totally different on our hands. But you have to go with the odds when you're looking at these things. And when you look at this one, that one says, hey, it's probably going to get some support there. Then of course the question becomes, where does it go to? Just like we did last time. Last week we talked about a swing point low getting tested. And that swing point low was here. And I'm going to actually clean this back up so we can see it better. Let's do it this way. And if we come back on here now, remember last week we came down, we tested in the top of this bar, we didn't have the volume, we rejected it, and we said we were probably going to bounce. That's exactly what we got, was the bounce, and we talked about the measure. The measure is the top. If you come back within 6 bars, it's the top of the retest regen bar, which was the bar that was broken. And we went almost to the top and then gave it up. Well, now it's going to be the same story. You're going to come right back up, and you're going to come back up, and you're going to retest, and try to regenerate. Now, unfortunately, or fortunately, depending on who you are and what positions you have, it's a big, wider bar, right? It's got a lot more space. That means this thing can come all the way back up into almost the same area that we broke down from. If it does bounce that far, I would think that most people are going to think this thing's turning and it's going to try to make a new high. And so the retest, regen can take you back to 1150. This thing can trade down to 1100. That's a 50-point bounce. That's 4.5%. That's a pretty big bounce if in fact it plays out that way. Of course, all of this is premised on the idea that you're going to find demand at these lower levels. That, the jury is still out. That we'll have to measure and we'll have to see. But right now it looks to me like that probably is what's going to happen. So that's the Russell, that's the indexes. And we can actually go over and look at some of the sectors and see the same sort of a concept happening over here. I'll just pick 2 or 3. I'll start with the IYT. You can see most of these things all have the same sort of structure, multiple swing points, and most of them, farther away on the weekly. So the danger of a huge cascade is not that great yet, but it could get that way. But right now they all have these, almost all of them have these structures, ABCDs down, and they're almost all coming towards a completion point. This one has a bit farther to go, but if I look at some of the others, you can see that most of those, or many of those, have already completed or are about to complete. Here's the SOX. Remember, the SOX was just this straight up move. Finally got that bar that we thought was a top. Now we come off, volume expands as we come back into this area. This structure too, if we go to the daily, ABCD structure, right, off the top. And this one's just about done. And so I think you're going to find a lot of these in the similar situation, in that on dailies, most of them have ABCD bearish ABCDs. Most of them have their swing point lows quite a ways away. Some of them have already finished. For example, if I look at the XLF, here's the weekly. You can see the kind of damage it's doing there. And this one doesn't particularly look good. It just finished off an ABCD structure though. Volume was a lot heavier as it came back. It still could test into that Feb 3 bar. And so it's interesting that the indexes already did that. Now you're seeing some of these sectors come back to do it. A pop back up from here, what does it do? Well, again, it will be a retest regen. From where? Well, we've already retested and regenerated these bars. All of them did the same sort of thing. They all gave us heads up as to where they wanted to trade back to. That was a pretty good read, right? Well, now that you've broken, you can see here we've broken again, so you just lean back over and look for it. Swing point low right here that just got broke. Where's the top? Right there. Sectors don't look to bounce quite as much as the indexes themselves. Let's pop overseas, and I haven't had a chance to review these in detail, so we'll do it together. Let me go find the world markets. I know that most of these have been showing a lot more strength. Let's pop through them on the weeklies and see what they look like. So starting with Australia, the All Ordinaries, I test the top, and let's see here, 43.40, doesn't have quite the volume. It looks to me like it hit it pretty good though, so it's probably going to mill around up there and try to break it still. India, so I'm doing some of the emerging markets here, nice big spike up. This thing's still going, that still looks strong. Brazil wouldn't trade down last week. Over under, but still more volume. Brazil can still trade higher. Next stop 54. It looks like it's going to try to get there. And so when I look at these markets and then I compare it to our markets, I can see why it's going to be difficult to get the sell-off. Before I go to Europe, let's continue on with other shares, both over in Asia as well as Canada. Here's the Hang Seng, actually pushed with volume, failed to stay over the high, and it failed on that one. So what is that? 14.6, did 13.3. So that looks like it's probably going to try to test a little bit more on a weekly basis and also on a daily basis. Let's see what Hong Kong looks like. So that was the 8 shares listed in Hong Kong, the Shanghai 8 shares. And this is a break over an ABCD, but it's really nothing to it, right? It's just a break over a 2, 4, no. It's going after a high, it's doing volume. That actually looks pretty good. And yeah, this one looks to try to test the highs again. Let's go up to Toronto. My friends up in Canada, let's see what's there. Just hanging at the highs again. And right now, they can't get anything going. They got a lot of swing points lined up down here. If they start to break, that could be a big break. But right now, still hanging, still range trading it. Let me quickly look at a couple more over in Asia. So I'll do Korea. And Korea's got a little ABCD structure to the upside. Looks to push a little bit more. Taipei, same thing. So when I look at all of these, right, Asia and Canada, Australia, those two look to be range trading probably. The rest of Asia wants to try to bounce higher, except for Japan. If we look at Japan, Japan's trying to break down. Doesn't have the volume though. That's an interesting read. 13, so roughly 14,000. 13,960. It traded and closed just over it, huh? No, it closed under it. So that's a break. Yeah, it shows that. And it doesn't have the volume. Okay, this one's really interesting. So, you know, Asia all wants to trade higher except for Japan. And Japan has multiple swing points on the weekly. And those are also multiple swing points on the dailies. You just broke 2, 3, all in one swoop, and now you're going, yeah, that's it. 1, 2, 3. So, boy, this looks to trade lower, doesn't it? And that's going to threaten that one as well. This is not a place to be parking your money. This one looks to get uglier. Could get a little bounce somewhere this week, but the downside still looks like where Japan's going. So all of Asia except for Japan still looks okay. Now let's go back over to Europe right quick. So I'll start with the CACs. These guys were struggling last week. So CACs made new highs, came off the highs with volume, spikes down, just does a little hammer. Well, that one, it's not in trouble. It's a big range trade. So Europe, a big range trade. So basically the ranges were here and here. and you got a little peak over the top, a little peak underneath, and it's still in this range. And it held right where it had to. Looks like it's going to start to bounce, close the gap maybe. Let's see what the others look like. So that's the CACs. The DAX is the next one. And the DAX, range trading as well on the weekly. And the same thing with the daily. It got into the big bar and rejected it again. So this is twice now it's tried to test in, excuse me, into this bar here, where all the volume is. Try to test into it there, actually got into it here. Volume's not as big. This one's also going to bounce. And let's see what London looks like. And if we look at London, this is just a mess. It's just a big range trade. I'm on the weeklies. For those of you joining me late, these weeklies we try to look at on the show, the Sunday show. Yeah, it's just a huge range trade. So it's really nothing to worry about until it breaks these highs or lows. And you'd only worry if you're on the wrong side, right? But right now, this is just a big range trade. So the real tell is in the DAX and the CACs. They look to bounce. Asia looks to bounce. Our ABCD structures down are about done. Even though there's danger on the NDX, the IXIC, and even the Russell, still looks like it's probably going to bounce before we get down there and really try to break stuff. And then if we do that, right, that's a whole different story, because if you start breaking on the intermediate term time frame, that potentially changes a lot. And I was trying to think of if I have something readily available. I don't think I do, so I'm simply going to find a more empty chart here. Yeah, like this space here I can use, and this is the OEX, it's the S&P 100. You should think about stocks in three things, right? And I know I've said this before, but I'm going to try to repeat it. Your indexes are up here, right? Your sectors are here, and the stocks themselves are down here, right? And the relationship between these things, right? If I could write it a little bit better, the relationship between these things is such that, stocks move sectors, sectors move indexes, right? So when you get enough breakdown here, these start to break down, and these start to break down. Now this relationship also is true of time. If we take and we consider this same sort of a thing with the short-term time frame, the intermediate-term time frame, and the long-term time frame, right? And that's why we always look at time frames, is because that relationship that we just talked about is true here too. If the short term starts to break down, that's going to affect the intermediate term time frame at some point potentially, which itself will affect the long-term time frame at some point potentially. So when you start seeing danger here, initially it only affects the short-term time frame. But at some point, if enough damage is done for a long enough period of time, it's going to affect the intermediate. And the same principle is true of the long-term time frame. This changes very infrequently. We're talking on years, right? You get many, many months, potentially years before this thing changes. This changes over a period of months usually, right? This changes on a period of days and weeks. And so you can see the granularity difference, and that's why you're always interested in this one, because this is just like on trends, the one in the middle is the one you care about, right? On trends, it's sideways that you care about. When you go to sideways, that says you can keep going down, right? Or if you're coming up and you get to sideways, that says you can get on up to bullish. It's kind of the transition guy. Well, it's the same thing here. The intermediate is kind of the transition guy. You can't really break this one down unless you break that one. And so this, when it starts to change, is a lot more to worry about than down here. Short term's for traders. Intermediate, that's for investors. Right now, intermediate's not in danger, but it could be if we go far enough. Let's go look at the ox markets. I want to look real quickly while I have a few minutes, and I'm running out of time, so I'm going to pop through this pretty fast. I want to quickly look at the three main things here. The dollar. Let's see what the dollar looks like. Trying to break out the lows and extend farther. Let's see what the daily is. And the daily didn't have the volume. This thing looks like it's going to hold still. All right. So if that holds, that should make it difficult on gold. If I go pop into gold, gold itself got a pullback last week. It's going to try to pop up. It's testing back in there. Has no volume so far on the jump. Testing in on the daily. That looks to fail. Gold looks to try to come back. And let's look at our bonds. Bonds last week broke out and went up and tested that big bar high on the daily. Let's see what the weekly looks like. So they're over the swing point high finally, and they're over multiples. So this is a big break, and the bonds could carry farther. Now that says it should carry 2 to 3 bars, right, on the longest time frame, which in this case is the weekly. And you can see the push here on the daily. But the weekly, you could gyrate lower before you ever go higher. That would allow the bounce, if the bounce is going to take place. Or you might even get this to push a little bit higher even while a bounce takes place. ABCD structure here looks like it's almost done. Let me see what the numbers are. 107.17. And then we got 10. What is that top? 109. So it's about 220, 230. That's 10. That's 110.90. We're almost there, right? So that ABCD structure is almost done too. So you know, all these things look as if they're meshing together. This market's going to try to bounce this week. We'll have to see how far it gets and how it looks if and when it does it. We got a quick question here on PFE. Do you think PFE will break the weeklies? Let's quickly take a look at it for Tommy and see what it looks like. So it's at the lows, got volume expansion. You're coming into these huge bars over here. 29.81. I don't think it's going to be able to break them, and it's going to hit them. It's probably going to hit them tomorrow. See what the daily looks like. Well, that one's a toss-up. It looks to me like you'll probably get a bounce, but it ain't going to go far. So if you're long this one, I'd use the bounce to scale out some. And what it should do is it should come back. If it's going to bounce, it should come back and try to do a retest regen off the lowest one here, which is there. So I'd use that area to try to get some of my money back out of this thing. You actually have another one over here that broke, so you probably won't get as high. So maybe into this area here. All right, I'm going to have to leave it at that, folks. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and was your weekly TA wrap. Have a great night, folks. Take care of yourself, and I'll see you next time. Until then, I'm out of here. Go enjoy the snow. Take care. Good night, folks.